Welcome to Drill Down Earnings. We have fourth quarter results from Palo Alto Networks just reported. Interesting quarter from this company. Remember that the last two quarters, this company really surprised us with bad news. So this was kind of okay. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. This is the business story behind one stock on a move, and that stock, of course, is Palo Alto Networks. I say on the move, Wall Street liked these results. It was a beat compared to what the estimates were. It was better than the company's own guidance as fiscal fourth quarter earnings. But when we dig into the business here, we see the actual numbers. Well, let's talk about those numbers. Fourth quarter revenue is $2.2 billion. That's up 12% on a year-over-year basis. Now, the fiscal year, up 16%. So right there, you know that the most of the growth was in the earlier half of the year, not in the end of the year here. And indeed, growth is slowing for this company down to 12%, but still growing. Double-digit growth is really nice for the biggest security company in the world. And their EBITDA margins getting a little bit better. They were down to 9% last quarter, up well over 10% this quarter, and that's a good thing. And their RPO growth, their remaining performance obligations, to me, this is actually a bullish number. The growth is stalled at 20%, but when revenues are growing at, 12%, and RPO is growing at 20%, it's a pretty good sign. It means they've got a book of business waiting for them. And one of the reasons they have that book of business is because ransomware attacks are just increasing fantastically. There's been a 50% rise in ransomware attacks in just the last 2 years. It's according to Palo Alto Networks, a self-serving statistic. But indeed, what we're looking for are these sort of extra cybersecurity challenges. And the thing that everyone's listening for in the conference call from Palo Alto Networks is, did the big CrowdStrike outage that grounded the internet and indeed hundreds of airplanes across the country and in the world, did that lead to people companies switching their business away from CrowdStrike and towards the very different solutions of Palo Alto Networks? And the company was somewhat uncommittal, but they did say that a recent broad outage has elevated C-suite conversations. So that's not necessarily business, but it's a move in the right direction. So when the numbers came out, the stock rose a little bit, basically flat during the conference call, but that's after a 64% gain in the last year, which is pretty good for this business that has been meaningfully slowing. When asked about what was going on in the state of business today, CrowdStrike, of course, very much in the front of people's minds, the CrowdStrike failures, I should say, of the last month, CEO Nikesh Arora had this to say.
That was a tough event. It simultaneously impacted tens of millions of users, which is unfortunate. I appreciate the way CrowdStrike handled it. At the same time, it caused two things to happen. One, customers are asking us, you have the same product, how do you deploy it? And as I highlighted to you, we have a fundamentally different way in which we do content updates and have been doing it for a very long time. So we were able to articulate that. Funnily enough, some of the customers were busy remediating that issue while we're trying to get our deals done with them. So kind of interesting. They were saying, I'm so busy fixing that. So we had to sort of drag our deals kicking and screaming in some cases. So that was kind of interesting.
So there you have it, straight from Nikesh Arora about how this business is doing right now. But what's it all mean? What's your big drill down earnings takeaway? And what's the one number that tells us a whole lot? I'll have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Palo Alto Networks just reporting fiscal fourth quarter earnings. Here's what you really want to know, the top of mind summary right here, $2.2 billion in revenues. And that revenue growth is slowing at 12%, but there were fears that it could be a lot worse. Indeed, the company's own guidance was that it was going to be worse. So they'll take 12%. But to me, the number that jumped out was with only 12% revenue growth, you saw 20% growth in RPOs, or remaining performance obligations. That suggests to me that they're booking some business, that they've got some things sort of in the bag going forward, which should be good news for Palo Alto Networks. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out at X at CoryTV and Instagram and TikTok at Drill Down Pod for these short earnings summaries, or the full Megillah right here on YouTube at the 6.5 Media page, I should say, on YouTube.